Hello, and welcome to another update video about LINK. LINK has performed quite well over the last couple of days. Only mentioned in yesterday's video and the day before that there might be a low in place here in this region. That's why we had it on the chart. This support area, trading area, we see a reaction to it right now. I think my objective in this video is to give you targets for a potential third wave, but also highlight to you which level now needs to hold to keep the upside pressure alive after the price reacted basically to where it needed to react after forming 5 waves down into support. So it's looking quite good at the moment on the LINK chart. Obviously it's still slow, and obviously these movements are too small to really confirm we are in the 5th wave, but it's going well. And it's, not necessarily about confirming are we in the 5th wave, but about identifying decent trades and identifying decent setups. And one of those decent setups was, of course, here the support region between $13.14, $13.14 and $14.03 that I communicated recently to you that we expected the price to get to, and then where the price ideally should have reversed. And it did that, and it's trying that at least. At the moment, at least, the market tries to form a lasting low here. So we're going to take a look at that now in this video. Overall, bigger picture also for everybody who's new on the channel, what we're looking for is here one more high into the region of $21 plus over the coming weeks, possibly over the coming weeks, maybe even months. Sometimes that takes a really long time. It will to a degree depend on Bitcoin, but then we also know that a lot of these coins are decoupling from Bitcoin from time to time. So yeah, while we need to take the entire crypto market to a degree into consideration, they do not. The crypto market itself doesn't change the relevant levels here that tell us if we are in an uptrend or downtrend. That's only what the Fibonacci levels as well as relevant invalidation points and structure tell us. So we're still looking for a 5-wave move up here from the June lows. So we have a 1 to the upside, first wave up, wave 2 to the downside, the pullback, third wave rally. 4th wave pullback might have completed here around the 8th of January, and that 5th wave is now possibly unfolding. Looking at the 5th wave in a little bit more detail, that's obviously being challenged, or it was challenged when the price dipped into this support area that I defined for you between the 50% retracement and the 78.6 retracement, but the market is reversing. At least it's trying to. So, yep, I mean, what did I highlight? I did highlight to you that, okay, if this is a wave 1 and this is an expanded flat in the wave 2, then the low should really ideally be in, because in the C wave we had 5 waves down. And yeah, I mean, you can never rule out one more low is possible to $13.14, but below that level, we would have to scrap the idea that this here is a 1-2 setup, basically a first bullish move in wave 5. Just because, anything below the 78.6 Fib level typically breaks down, okay? It leads to a breakdown sooner or later. For now, we are holding that support area, however, which is good. Now, also, what I highlighted to you is that this is, however, not high confidence necessarily. The reason is we are now entering a 5th wave, okay? So don't trade it aggressively necessarily, because in a 5th wave, you can deal with ending diagonals, and this is likely an ending diagonal because the wave 1 is clearly an ABC structure at best. And then the wave 3 would need to be an ABC. The wave 5 as well. Not from there, from here. Somehow, yeah? So 5 waves, we're looking for 5 waves in wave 5, but it could be an ending diagonal, and then we are dealing with corrective structures. So that gives us a very clear invalidation point. And we can keep this scenario currently of rising prices alive as long as the Thursday low is intact. That low is at $13.53. That's the invalidation point for the current idea that possibly here wave 3 of 5 has started. And we've broken above the last swing high, which is good, but it's still too small to really confirm that a third wave is in the making. We need to see a next level broken. Here the wave 1 high that formed on the 11th of January. Need that level broken. That was at $15.74. So that's the next real resistance level for the price to attack and to break. Okay, for the bulls to break. And then, yeah, I think that's sort of what we're dealing with. Now, what I wanted to highlight as well is what would be a target for wave 3 or 5. And it's typically the 1.236 extension is the bare minimum at $17.84. This is where we have this previous swing high that formed on the 28th of December. And the 1.38 FIB extension is ideal. That's at $18.43. And that's all around this green resistance area anyway. There's a previous swing high that will create probably some resistance around $18.30. That's sort of what I'm watching currently on the LINK chart. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.